Okay, so I want to talk a little bit in this panel, welcome, a little bit about how we're going to enable a lot of what we've been talking a bit about earlier on today in terms of technology. And David, you've already been talking a bit about the big pipes of institutional capital into the space. And I suppose my first question for all of you guys is, and it's probably worth explain as we go along, just explaining each of your own contributions to how you'll be able to enable the coming revolution, disruption in the financial services. What's the one key thing that technology has to absolutely fix now for this industry to grow as fast as it could do? Where's the speed bump going to come? David, you first.
So I think the first speed bump comes in, or at least the one that's on my mind the most, is, you know, all the lenders we've been talking about, even the lenders in this room, as I think I just said, it's a multi-billion-dollar business, which is large, but lending globally is a multi-trillion-dollar business. So how do you get all those other sources of lending actually online? And that's different. So if you're an online lender, if you're a P2P lender, you've built your technology in the past 9 or 10 years. It's more modern, it's more flexible, you probably have an API, it's easy to get institutional capital. If you're a traditional lender that's been in business for 20 years, 30 years, you might have actually a larger lending business than many of the people we're talking about, but you don't have the technology to bring that online. That's where actually a lot of people here can help.
Yeah, Steve, I mean, you at Salesforce, I imagine, have a few solutions in that area. But what's the big speed bump you looking at this sector now?
I think at Salesforce, the biggest thing for us is trust. So,
yeah,
you know, if there's one thing that can hit a speed bump in the industry, it's that. I think, you know, we provide solutions. We're asking customers of ours, we're asking clients to trust us with their data. So if there's any issue around that.
Yes, because that's a real issue, because if the industry needs to originate more in terms of, and looking at the consumer panel earlier on, they're going to have to get a lot more consumers through the door, near prime, that kind of stuff. And the consumers have got to trust the fact that if they give their client, if they give their platform their consumer data, it's going to stay safe. And is it?
Yes, it is. Yeah, I don't think we'd have a business model if it didn't. You know, we publish all of that. It's a public available technology and our information, should I say. I think you guys use it, so we're here together, and you can kind of say you do trust us. Yeah,
that's right, we do.
Stuart, you've got a slightly different kind of approach, because let me just explain. Asset Match, great business. You're effectively, correct me if I'm wrong, but effectively building, you have got one, a secondary market, or a private market, I suppose is the best way of calling it, which allows people to effectively liquidate their private assets. There could be shares, there could be something. Now that raises the question of technology around marketplaces, doesn't it? Because it's all good and well us saying I can invest in consumer loans, I can invest in SME loans, yeah. And then actually, what I'd like to do is either get out of it quick, yeah. So that's where. So what do you think is going to be the speed bump for the industry?
Our speed bump.
Yeah, I think you're right.
Our speed bump is actually the users at the other end of the terminal to us.
Yeah.
And that's their education. There's a very young market, I think, in the peer-to-peer lending space. We're about equity release and exits from private equity investments. So we've created a platform where people can come to, and we've traded about 18 million. So we've freed up 9 million of equities already, and I can tell you what some of the people have done with that money. But there's a lot of hand-holding that's needed. It's a much older audience, so we've invested in a lot of technology, but I'm afraid it requires, still at this point, relative to the ages of the users, both as the sellers and also the later stage, largely de-risked company investors, there's a bit of hand-holding and old-fashioned shoe leather that's needed. So when you asked the question, I was actually quite frightened of what my answer was going to be. It's the speed bump for us is the people at the other end. That when we say to them, have you looked at our website? And they say no, you know you've got to kind of get them up to speed as quickly as possible. But it is happening, and we're starting to get with younger companies. We had Brewdog and their 14,500 shareholders do an auction on our platform. And we were a little bit scared. We got through it. 220 people turned up, but they were a much younger crowd because they were the ones who invested in that particular company. But for the established companies, it's an older investor base.
And actually, just while you, because I really do want to, when you talk a lot to institutional investors beginning to look at the whole alternative finance space, a lot of them go, I'm only going to invest if I know there's a really good secondary market. I know I can get out of it. And you already provide the secondary market in actually probably stuff that's actually more difficult to trade in many cases than, say, straightforward consumer loans in one respect, I suppose, or not. What's your experience about how difficult is it to provide those secondary markets?
We do not operate on a constant quote basis the way the stock market, the exchanges, ISDX, AIM, or the main market use. We use periodic auctions. We believe that...
How often periodic?
We work with a company so that they grow into liquidity they and their shareholders need. So we'll often start off with a quarterly auction basis, and it goes back to the old commodity markets, way back when, March, June, September, December. And then if it requires more regular auctions, we'll grow with them, yeah.
Fine. Okay, very interesting. I might come back to that. Leonard, in a sense, you're also, like David and Orchard, involved in the deep plumbing of how a lot of these systems work. Again, what's the big speed bump in your experience everybody should watch out for over at Profile?
In our experience, we come from we're a financial software company. We've been around for 25 years. So we produce we've been producing platforms for financial institutions and banks. And over the last 2 years, we've been investing our resources into building a peer-to-peer and crowdfunding platform. So really, what we're seeing is there is a battle between what we're trying to do, which is create a sophisticated, flexible platform that can be used by different platform providers with different products, compared to the original in-house builds, which all the existing and big platforms out there have done at the beginning, as they were pioneering the industry.
So effectively, you would say better that a lot of the newer platforms, or maybe the slightly older platforms are looking at just rejigging, don't do the stuff in-house because the execution risks are going to be quite substantial if you have to rebuild the home again.
I could give you a ton of reasons why one should get a product that's already made compared to building in-house. Building in-house, you know where you want to get to. You don't know if you're going to get there. Plus, last year, I remember Giles from Zopask, I asked him if the IT expenditure was the highest expenditure for the platform. And he was kind of shocked by the question because, no, we spend more on people.
Yes.
Of course, because you build the platform in-house. So you're going to have, maybe 8, 10, 15 people just developing the platform as you get bigger. Things to consider, for example, is in your first year, you might have 10,000 clients. Maybe down the line, in 2 years' time, you might have 1 million customers. And how many of these are going to log into your platform simultaneously? Is your platform going to be able to sustain that? Just as an example.
David, I just want to talk, you deal a lot with big US institutional clients and European, but in America, where you started off, a lot of institutional clients in the States. And I was talking to one leading fund manager on this side of the pond, and they were saying, when they deploy money, they're having to literally have somebody watching stuff come out every day, 2 or 3 times a day. They're real-time bids, exactly what Stuart's described, but more often than quarterly. I mean, actually, if you have a platform that cannot provide you with virtual real daily auctions or real-time, how much of that is a problem for a lot of the clients that you work with?
So that actually was one of the first problems that made us want to start Orchard in the first place, where we were all personal investors on Lending Club, and we'd found this interesting for multiple years, and we would go on every day and try to get loans,
bing,
they would go away very quickly, and we thought, okay, this is a problem to be solved with software, and we started doing this for ourselves and realized, okay, if it was a problem for us, if you were trying to deploy, millions of dollars, it was a much larger problem. The big platforms with APIs have solved that, but as you alluded to, if you don't have an API, or if you're a traditional lender, that's a lot harder. There are many ways of solving that problem. One way we've done that for some offline lenders, and we just announced a partnership with a company called Mainspring Funding, and they're an equipment lender. They're in all the borrower acquisition channels for medical and construction equipment in the US. They know how to underwrite, they know how to service. Yeah. They're in a great niche. They've been operating for 20 years, and now we've built a system to ingest their data, in a sense, without an API, so that our investors can trade more or less programmatically on their loans.
So would you suggest that if a platform out there doesn't have an API that can effectively not do real-time, but say daily stuff, they shouldn't be in the game of institutional money?
No, not at all. I think most of the lending in the world is happening on platforms that don't have an API.
Yeah, exactly.
You can count on your hands who has an API,
Yes.
and there are trillions of dollars of lending happening in the world. So I think the key is you don't need an API, but you do need structured data and a good process.
Yeah. Stuart, just on that perspective, I mean, you again have got a structured approach to how you deal with marketplaces. You didn't do it. You said you do it, say, on a quarterly basis. Have you never been tempted to sort of look into this market and provide a secondary market for some of the platforms that are here today?
We are in discussion with one of them, which is we're looking to do a joint venture with Arch over on its debt.
Okay.
That's been announced a while ago, and that's in. I think there's a shortage of secondary liquidity. The FCA addressed it, I think, last autumn.
Yeah.
And they have, I think, an interesting product, and they're in the 2 to 5 year space. In the 1 to 6 month turnover stuff, there's no real requirement, I don't think, for a secondary trading of the loans.
No,
but in the 2 to 5 years, with what we're going to see, I think, in terms of interest rate changes and people becoming more interested in the space, etc., some people want to take some profit, and their circumstances change.
Stephen, just looking at the origination side of the fence, you deal with lots of big clients who really do scaled operations with customers. What's the one thing all the platforms here have really got to watch out for, apart from the trust element you mentioned earlier? I mean, how are they going to be able to scrub that data and get useful stuff out of it? Because that seems to be the key, because it's no good just a load of rubbish data coming in if you can't make sense of it.
Exactly. That's one of the biggest challenges that our clients have is we're a central repository for the data. Is the data clean? Is it usable? And what do they do with that data then once it comes in? Common trends that we're seeing, we're being asked for analytical tools, some of which we've released this year. We're being asked for marketing communications tools. So Salesforce is more than just that central data repository.
Yeah.
It's a platform that can help business operations, right? So from a marketing communications point of view, what we're being asked for is automation, nurturing. How can we grab that market share? And that's where we can help.
Leonard, on your perspective, I mean, how are these platforms going to manage their scaling operations without? Yeah, how are they going to scale it without you? Obviously, great difficulty.
Well, I think also, again, when in my experience anyway, I've seen many trying to build the platforms in-house. They use web developers. We, for example, are really software developers, so we create the base of the platform, the core engine. As a core engine, that it does multitasks. You know, we'll get all the information from the web, from your customers, and manage it. So whether it's onboarding clients, it's risk suitability, credit scoring, matching, secondary market, bidding, bundling, securitizing, reporting, auditing, integrating with the third parties. You have to understand that a platform is not just, you know, developing a platform is not it. You have to integrate it with a bank or with your custodian. You have to integrate with lists, AML and KYC lists. Big data, you want to integrate now with social media. You want to suck in as much data as possible to calculate and create your own risk algorithms in order to even save money from Experian. Every time you send a message to Experian asking for a credit check, that's like £10. You want to save money on that? Of course. So if your computer inside your platform will calculate for you beforehand if a customer is too risky. So if it's too risky, don't bother sending an Experian request.
Okay, we're running a little bit behind, so I'm going to call it a day there. We're going to have a coffee break, and we're going to have a quarter of an hour coffee break. So if you could all come back here in quarter of an hour time. In the meantime, I'd like to put hands together for these guys. Thank you very much.
Thank you.